Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, the markets are doing really good, right? I mean, the NASDAQ is back in positive territory for the year. The S&P back in positive territory for the year. They're up about 3 or 4%, right? The real action, of course, is in the gold market. Gold's up about 30% this year. The miners are up about 40% this year. You see, it's a debt problem. That's what gold is telling us. Gold is telling us that it's a debt problem. Now, there's a lot of people predicting that gold is going to come crashing down when the market comes crashing down, just like it did in 2008. Now, they don't understand that it's different this time, being gold, being a tier one asset, being the problem is the debt market. You see, normally when the stock market comes down, I agree, normally people go into the bond market, but the bonds, they're the problem right now. Bonds are debt. We have too much debt and people don't want it anymore. Foreigners, they don't want to buy our bond market anymore. I mean, we got tariffs on the foreigners now. We're making enemies. We got confiscation. If we don't like the foreigner, we'll just steal their bonds, right? We'll steal their assets. We'll weaponize the dollar. So it's a problem. But right now you got the markets up again, right? You got a chance to get out up here if you want to. Now, I do think that we're still going to push up higher, but I do think towards the end, between now and the next 6 months, I think this thing's all going to come unraveled. I think it's really going to fall apart. And I think once you see it go down, now you're going to see it start to drop, right? It's going to start to drop 10% first, then 20%, then 30%. Then you got us baby boomers, right? I mean, we got all of our money tied up in the market. Everybody has their money in the markets, but us baby boomers, we have the wealth, right? Because we've been saving most of our lives and we put the money in the markets because we know the markets only go up. But once we see them start to drop 10%, 20%, 30%, we're going to have to sell because that's our retirement savings right there. And it's going to push the markets down farther, 40%. 50%, 60% maybe, they're going to keep coming down. And I think the unraveling is going to start towards the end of this year. Now, right now, I do agree we'll probably get them up to a new record high and push them up a little bit beyond that. But you see, the real estate market kind of has the same problem. Now, not according to Realtor.com, chief economist Daniel Hale, right? Now, they say that interest rates on mortgages are coming down to 5%. So get out there and buy these 7% houses because when they come down to 5%, these houses are going to go higher. Now, it's funny. Now, she's the chief economist, right? I'm an economist. I'm a little different type of economist. I'm one that sees the world in a different light from these Keynesian economists. I'm an Austrian economist, right? I believe in fair markets, sound money. I believe in market forces dictating where the markets go. I think we're going to start to see this. Now, she thinks that the market's going to come down, 5%, right? Interest rates on mortgages. The reason that they believe this is because the Federal Reserve, they say, is going to be cutting interest rates back to 0%. Now, the reason that the Fed would be cutting interest rates back to 0% would be because they figured out that we're in a recession, that we're in a big recession, right? So even though the rates are coming down to 0%, I say on the long end of the market that the rates are going to be going up. Now, long end being, let's call it the 10-year, the 20-year, the 30-year. They're going to cut the rate on the 6-month, the 2-month, maybe even out to the 2-year. They're going to cut it down to 0% when the recession hits. And the recession, I claim, we're already there. They'll figure it out maybe in 4 to 6 months from now. They'll figure it out, go, wow, we were in a recession. We better get these rates down to 0%. And that's what they're going to do. But here's the thing. In a recession, what they're going to realize is that people are going to be out of work. You see, we have these things called mass layoffs coming. So we're going to have all these people out of work, and we're going to have the long end of the bond market heading up higher, going up to we're at 7% mortgages now. I think we'll hit 10%, right? Maybe even 12, maybe 14% with people out of work. So you got no one working and you have mortgage rates at 12 or 14%. I mean, home sellers are going to get slaughtered. They're going to get slaughtered in the next year or so, right? I mean, it's going to be a bloodbath. There's going to be inventory flooding onto the marketplace, but not according to Realtor.com. According to Realtor.com, it's going to be the best of times. We're going to get the mortgage back to 5%. I do agree with the article that the Federal Reserve is going to cut rates down to 0% on the short end. I think that's going to send the long end higher because it sees what they're doing. It sees that inflation is also going to be coming back. So we're going to have these people out of work. We're going to have inflation up here. People are going to be in a world of hurt. You're going to find deals on automobiles, boats, RVs, anything you want to buy, and especially on houses, right? Now, I make people sign a disclosure when I sell a house saying that their house can drop by 50% because I want them to know that, right? I don't want them to be aware of what can happen. I want them to be aware of our debt problem in this country. Right now, look, we're 37 trillion in debt, right? And we're going up 2 trillion, 3 trillion a year. So 10 years from now, we're basically going to be, well, you just do the math, 67 trillion. We're 37 trillion now, average 3 trillion. Now, if we get a recession, which I think we're already in, they're going to print 6 trillion in that year. And that recession is probably going to last a couple years, 6 trillion each year. So maybe $67 trillion is a conservative estimate for the amount of debt we're going to be in. Now, once again, interest rates are going to be going up on the long end of the curve. There's no buyer, right? We've killed the golden goose, which was the foreigners were buying our debt. We put tariffs on them. We confiscate their assets. I mean, America, it's great, right? Because we have the power. Well, maybe they have the power because they're going to stop buying them. So what does that mean? Well, that means either the Federal Reserve buys all of them. Now, here's the thing. Federal Reserve, their balance sheet got up to $9 trillion. Now, right now, it's down just under $7 trillion. That's really good, right? But they've already started quantitative easing again, so I think those numbers are starting to go back up. They're just not reporting it yet. It's delayed reporting. They just bought $40 billion worth of bonds because the bond market failed. Nobody was buying the bonds, so the Federal Reserve jumped in there. Now, they're going to have to buy, what, just this year we got $9 trillion of them rolling over with no buyers, right? So the Federal Reserve is going to have to jump in there and buy these, and maybe the balance sheet goes not just to 9 trillion, maybe it gets 12, 15 trillion dollars because they're going to have to buy them. Now, what happens if they don't buy them? Well, what happens if they let the free market decide where our bonds should be priced? Well, that's really scary, right? I mean, that'd be up around 15 to 20%. Now, what would happen there? Well, the government, they would default, right? I mean, they couldn't pay 15%, 20% on $67 trillion. We'd have a default. Now, of course, politically, that's not correct. And that's why they're not going to do the right thing. They're going to print money. We all know that. They're going to print their way, and we're going to see hyperinflation come to the United States. But Mike, reserve currency has never, ever hyperinflated in the history of the world. No government's been as stupid as ours in the history of the world. Look, we have the reserve currency. I agree with you, but we're going to hyperinflate if the Fed does not buy all of the debt because they have to buy it all, right? And that's what's going to push, that's what's going to push it up is the Fed buying all the debt because the Fed is not going to let the free market reign. Let the free market reign. We got 15 to 20% interest rate. So the Fed has to step in and buy it all. They don't have money. What do? They print the money, right? Which devalues all of our money. A lot of people are going to be out of work. We're going to see hyperinflation. Your money is not going to go very far. It's not going to buy things. Where it's going to happen to people that have to sell their house, people that have lost their jobs, that can't afford the mortgage, people that get divorced, that money Money causes a lot of divorce. Number one cause of divorce is money. When you got financial problems, you got two spouses working, one loses their job, they can't afford the house anymore. Well, maybe they get divorced, right? The one that has a job goes, well, I'll just go my own way. And you figure out what to do with the house. Well, what they do, they dump the house on the market. How do I know this? I'm a real estate broker. A lot of my business comes from divorce sales. Divorce is great for the realtor, right? I mean, I get to sell that house. I get to buy the wife a house, get to buy the husband a house. Usually results in 3 sales, and usually more as it just kind of manufactures itself. But divorce is very good for the real estate market. But there's going to be so much inventory coming onto the marketplace. You're not going to be able to sell the house. It's going to be a bloodbath for the home sellers. They're going to get slaughtered, right? It's going to be a race to the bottom. Now, no one believes this. I don't expect you to believe this. Why don't I expect you to believe this? Because your area only goes up. Nobody gets divorced in your area. Nobody loses a job in your area. Your area is going to continue to go up with mortgage rates skyrocketing past 10%, 12%, 14%. Your area is going to continue to go up. But most areas, I got news for you, going to be in free fall, not just a little bit. Right now, the baby boomers, we talked about it in the stock market, right? Once the stock market drops 10, 20%, the baby boomers are going to be running for the hills. Well, guess what? Guess who owns? Well, most of the homes are owned by baby boomers over the age of 65. It's, I don't know what percent, but it's like 70% of homes are owned by old people, right? Those homes are going to be dumped on the marketplace so far, especially when they see their equity getting wiped out. You see, this is their retirement plan. They're planning to retire on the equity in their home. Now, we got that equity. How did we get it? Did the houses go up? No, the dollar went down. They printed money, right? I mean, they printed $37 trillion. And this is what's making gold skyrocket. Now, am I happy at gold skyrocketing? No, because we're 37 trillion in debt and continuing to print money. Now, am I glad they printed all this money? Look it, I'm a baby boomer. We had great lives. We way overspent. The poor generation behind us. Actually, I think it'll take a couple of generations to get out of this mess that we're handing off to them. Now, we go off into the sunset thinking we're geniuses. Look how successful I was in life. Look at how much money I made on my house purchases. Look at my real estate up. Look at my stock market up. Everything's up. I'm a genius. No, you weren't a genius. We printed 37 trillion in debt. That's why you look like a genius, but we are handing this off to the next generation. You see, people should look to improve and hand off a better life to the generations coming up. But the generations come up, this is the first one where they do not live as well as their parents. Look at the average. Look, I bought my first home, I don't know, 20, 21, 22. I was young to buy a home. It was probably the average age of a first-time home buyer back then was 26 years old. But this generation, the average first-time home buyer, you got to wait till you're 40 years old just to get close to the housing market. You got to live in an apartment until then or live with roommates because you cannot afford a house. Why? Because we inflated them so much. How did we do that? We printed money. People don't understand this. It's not the house going up. It's the dollar going down. And it's going to continue to go down. And that's why gold, $3,300, right? Dirt cheap. Silver's starting to break out. Everybody thinks it's a fake breakout. Look, if you're waiting for gold to come back to 2,000, Harry Dent says wait for it to get back to 1,000. You're going to be waiting your whole lifetime. Never going to happen. Silver, probably not going to drop back under $30. Probably going to see it above $50 soon. You want to get some real money. Why you can? Because it protects you from our government, right? It's what our government's doing to you. It's going to keep printing money. They're going to keep stealing your money. Openly, they say they want to steal 2% of all your wealth every year. That's what they claim they want to steal. But look, in the last 3 to 4 years, they've stolen 25%. Stolen it by inflating it away, by you losing your purchasing power. This is not slowing down. It is picking up speed. So what we got is a housing market where the baby boomers are going to start to see it coming down. And that's where they're going to throw in the towel, and you're going to see the inventory flooded on the market. Going to be a bloodbath of sellers. Sellers are going to get slaughtered. Thank your lucky stars if you live in an area where you can still find a buyer. I mean, that's great, right? I mean, it's a perfect area, but that's not going to last much longer. Not with the way we're going into debt, the way we're going to print money, the way you're going to see long-term interest rates skyrocketing, the way you're going to see the mortgage rates skyrocketing. Yes, I agree with the article from Realtor.com that they're going to reduce the short end back to zero when they realize we're in a recession. Yes, I believe that. And they're going to do a lot of money printing, trying to keep everything propped up, but they're not going to be able to do it this time. I'm telling you, it's changing out there. If you like this stuff, give me the thumbs up, punch that subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.